Getting a $20,000, $50,000, $100,000 assessments would be hard on anybody. What's happening right now here in Florida in terms of special assessments, insurance shock, buildings that are suddenly becoming unaffordable to a lot of people isn't just a Florida problem anymore. America's housing stock is aging, and that isn't just apartment buildings, it's also single family homes. It could happen anywhere, and so what's happening here in Florida, you really should look at it as a warning sign and learn from it, because it will come to other places as well. And in many cases, it already has. And so if you own a condo, if you're in a 1970s high-rise, if you're in a home that's built, say, prior to 1985, and you haven't really thought much about this in terms of what's inside of the walls, you really should, because it's aging and eventually it's not going to hold up. Okay, how did it get this bad? It really comes down to a math that may be hidden for 40 years. And I'm going to give you an example here. So just assume that a roof costs $500,000 and there's 50 units in the apartment building. That apartment building could have had 20 years to save. That means $500 per owner every year. That's pretty simple, right? But now let's just assume that condo owners, the association, said, you know what, let's just not even worry about collecting the $500 because we're not even thinking about doing the roof anytime soon or in 20 years. We want to make sure that the condo fees are lower. Keeping dues lower may have been popular with neighbors, and it also helps those that are on fixed income. But in reality, what's been happening is that they were really just borrowing from the future. And so here's the kicker. If now the roof really needs to get replaced and you haven't collected any money, what 20 years ago would have cost $500,000 in today's world with inflation factored into it could easily now be a roof that is going to cost $1.5 million. Let's actually go back and talk about what happened in 2021 here in Florida that really gave rise to these discussions that we're having right now in terms of deferred maintenance. It goes back to the Champlain Towers, which collapsed in Miami and 98 people died. It was a horrific incident, and that pressured Florida to pass the Surfside bill, which puts mandates on condos and co-ops that are 3 stories and higher and also older, where they need to have fully funded reserves. They have to go through structural reserve studies, and they have to address deferred maintenance on the buildings. The fact is that the standards now for how condo associations are maintaining a building has really changed. Unfortunately, what's been happening is that a lot of these associations that have been underfunding the budget because they didn't want to increase the condo fees or pass, high assessments, they're in real trouble. And now we haven't even talked about insurance, which has made this even worse. Florida older coastal buildings are extremely expensive to insure, and some associations are having a really hard time getting insurance without making major upgrades, and this is where the assessment fees come into play, or increases in condo fees. And so what happens is when these monthly costs actually rise sharply, buyers pull back, right? Because of affordability issues now. This is what we've seen over the last few years here in Florida, where condo prices in some pockets could easily be down by 20, 30, or even 40%. Florida is just an illustration of what may be coming your way. The median home in the United States was built in estimated 1980. Half the U.S. homes were built before 1980. And when it comes to homes here, we're not talking about aging being cosmetic. We're talking about things such as the roof is getting older, plumbing, electrical panels, the foundation, elevators if you're in a building, concrete balconies. And these are all very critical and also expensive to maintain, to upgrade. In New York City, for example, thousands of co-ops and condos are facing facade inspection requirements under local law 11. There's so many older buildings in New York City, pre-war buildings. I actually lived in one of them. The maintenance costs already back then when I lived there was ridiculous. I can't even imagine what it is today, but one must anticipate that the maintenance costs are going to continue to increase, and especially these older buildings, because structural issues are going to be found and the repair bills are going to have to come in. In Chicago, the vintage high-rises along the lakefront, those iconic 1960s and 70s towers, are currently battling a silent enemy. It's actually called spalling. Water gets in, the ice expands, and it literally blows the face off the building. Associations are now discovering in Chicago that what they thought was their stable reserves are actually just a drop in the bucket, can't really cover a full facade restoration in many cases. In California, these older wood frame multifamily properties are facing seismic retrofit requirements, while insurance carriers are pulling back from the wildfire zones. There are many more examples across the United States, but the difference thus far is that Florida was forced to confront everything at once. It became major headlines here in Florida. Other states are much earlier in the timeline, but the aging is there. Eventually, that is going to have to get confronted. We talked about deferred maintenance, and it's that one phrase I really want you to keep top of mind because it's so important in real estate, especially. It was kind of camouflaged with the rising home values, especially since the COVID era, all this demand. But now that the demand is kind of scaling back a little bit, but where buyers are really taking way more time to make a good decision for themselves, they're also looking at deferred maintenance issues before it becomes a problem. Either they're asking the seller for concessions or they're pricing that into their offer strategy. And it's those very well managed buildings and well maintained homes that are really going to stand out in today's market. Insurance companies are also not pricing like it's 1995. They've got very sophisticated systems that they're pulling information from. They're using climate modeling. They can rebuild cost inflation. They can look at disaster frequency data. And so their policies are getting more expensive and also stricter. Banks are going to require insurance on any property essentially that you purchase because they want to make sure that their investment is safe. And so if a building can't afford insurance, or if the insurance company flags major risks, well, that's going to be a really big issue with the lender. And when lenders see danger, they're going to protect themselves, of course, right? And so what they actually may do instead is refuse to finance units. They may require much larger down payments, charge higher interest rates, or they may blacklist the property altogether. Now, fewer buyers can qualify. Fewer buyers are going to be able to afford purchasing that condo or home. And with that, prices will drop because that specific property is not going to have as much demand. And it doesn't mean that the housing market is collapsing, but it does mean that we're entering a new phase. I believe that the next decade, especially with AI, is really going to be about finding properties that are resilient in the future. Buyers are going to be asking for, it's going to be very different. Here in Florida, people are asking for elevation, for flood zones, and a lot of them want to be in an X zone. And that mentality is going to spread across all of the United States, where buyers are going to be super educated and they're going to be pricing their offer based on ensuring that the home is resilient, or they'll have the budget to make it more resilient. The buyers who are not knowledgeable, which are going to be less and less hopefully in the future, they're going to be the ones that are going to find themselves holding a very expensive surprise. And that is really what I'm trying to avoid here, so that you're planning accordingly whether you're a buyer and seller. And so what do you do as a buyer? Well, you're going to have to get past the updates inside of a home, look past the beautiful countertops, and really understand the structural component of a building or a single family home. So let's go with a condo, for example. You're going to want to ask questions such as, how old is the roof? How funded are the reserves? When was the last time they've done an inspection? Is there a reserve study? What does the insurance history look like? Can I see the last 2 years of board meeting minutes so I can actually look inside of the hood, understand what they're all talking about here? What are they planning? I mean, these are all early warning signs that could potentially show up as you're going through this research stage. And if you're someone that's looking to purchase a single family home, you're also going to want to look inside of the walls. You're going to want to understand how old the electric is, the plumbing, has it been replumbed? What about the roof? Are there structural issues with the home? So get past the updates, because a lot of times you'll see investors are going to be flipping a house. The structural components, like we just mentioned earlier, they may have not even touched them, but those could be very, very expensive
if you now have to renovate.
As a seller, what does that mean to you? Well, if you have a really well-maintained property, that's going to command a premium. A condo that is well-managed as well is going to command a premium over those that are going to be struggling in the future. Age is really going to matter more when a home, a condo unit, is showing its age, more so than the actual age. Reserves are going to matter much more, and it's those associations that are smart about it that are going to win. And it's those condo owners that are currently saying, listen, let's really make sure we have a good reserve in place, that are also going to win in the future when they're selling. If this breakdown was helpful to you, like this video, subscribe to this channel for more of these types of videos. I wish you all a great day.